After crude oil recently witnessed this low, we have since then seen this new bullish trend forming out, and so in today's video we discussed whether the upside or downside potential for crude oil is currently higher. We're about to have a look at the most important technicals, fundamentals and also macroeconomics, and so let's start right away with the technicals. From the technical perspective, we do obviously have this bearish breakout out of this symmetrical structure here, and we had this recent low actually at around $58, $59, and we have seen that bullish reversal since then. But what we really like to note at this point is that we do not really see volume picking up that big. We are seeing this breakout here to the top with a quite small volume actually. And so we are quite concerned that whether this is actually really the beginning of a sustained bullish rally, because we could also see a form of consolidation happening next year to crude oil. And so to actually understand the underlying drivers of crude oil and to understand whether the upside or downside potential is currently bigger, we obviously have to take a look at the more macroeconomic fundamentals to understand those drivers. And so if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future update videos, and also support us here on our channel. Thanks for your support. Now let's have a look on the Brent crude oil weekly chart. It will not matter whether you're trading VTI or any other sort of crude oil, since they are all closely correlated. But today we have a look at the Brent crude oil chart here on the weekly, and you do see a quite interesting correlation here. You do see that those recent highs here at the crude oil price that basically marked the start of a massive crash have always coincided to a specific time in the cycle. And it is not necessarily a high that has been forming out after a big rally. We have seen here in 2020, for instance, that this crash actually happened after a phase of consolidation, more or less. And we do see that those beginnings of major recessions and crashes actually coincided to a interest rate cut phase. So we have seen already a bit of interest rate cuts, not only here in 2008 but also in 2020. We have seen that the PMI, the Purchasing Managers Index, has also declined or consolidated, and it has been here in those two examples at around 48, 49. And so we do have that correlation here. We have seen that kind of consolidation previous to the COVID crash as well. And we have seen that the US 10-year Treasury yield has also weakened previous to that. And so if you have a look at what we're currently seeing, you do see a little bit of similarities actually unfolding. You do see that those interest rate cuts have occurred. You do see that consolidation here at the PMI. You have seen a weakening at the yields, and they are probably about to continue here due to the fact that we're also seeing interest rate cuts continue. And what we have seen here also is obviously this transition to quantitative easing. We have seen that here in 28, and we have also seen that here in 2020. And it looks like we're in that transitioning phase as well right now, from quantitative tightening, in other words, a balance sheet contraction, to a balance sheet expansion here at the Fed's balance sheet. And you do see this long phase of bearish sentiment here at crude oil, and you have seen quite similar things previous to 2020. You have seen that high here in October of 2018. And then this massive kind of compression and consolidation actually followed here. And that ultimately led to this corona crash. Okay, and so we do see this empirical evidence that we might also see a crash happening first here at crude oil before we see a recovery as it happened here in 2020. We do believe that there are underlying weaknesses in the geopolitical world, and also in the economies of our world. We do see the PMI being quite stagnant for quite a while now, which actually also began by this phase of interest rate hikes We do obviously see it strengthen a bit, but that is probably just due to this liquidity. And we do see that yields have risen, and they are probably also deemed to fall again. We do see that historical evidence that whenever you do see interest rate cuts, that is actually happening for a reason. And that is just why we are more conservative concerning crude oil. Obviously, we can see minor breakouts to the top continue here, but we do believe that we're about to have a continuation of this ranging movement here. And so that is our outlook for today. I hope you enjoyed the video. If you did, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us here on our channel. And also make sure to check out our Discord server, which is also linked down below, so you can join our community even further. Thanks for watching. See you the next time. Bye bye.